Hi, my name is Douglas Lodmell, and welcome to the Secrets of Asset Protection. This is the Case Studies series, and today we're going to look at a very interesting case called Agent X. Our first case in this series was called the case of Mr. John Target, and if you haven't seen it, I'd very much recommend that you watch it. It talks about LLCs and about how a limited liability company interest of only 10% turned into a $1.6 million personal liability. So if you haven't seen it, take a look. In this one, we're going to look at something completely different. Agent X was an insurance salesperson. He represented a big insurance company. He was an agent, had a small agency like you see in the corner of a small town. He had a client and he sold an auto insurance policy to this client. The client had inherited 80 acres of land. This is in the Midwest. And that 80 acres turned out today to be worth $5 or $6 million. So when he bought the insurance policy, Agent X recommended that he buy more than the minimums. When the client, who I'll call Mr. Fruga, made the decision, he decided to buy the minimums. When he inherited the money, his mind didn't expand around the money the same way that his net worth expanded, and he was still thinking very small. So he bought the absolute minimums, which is $25.50. You know where this case is going. He lends his car to his brother. His brother gets into a car accident, kills a young man. The widow, they calculate the man's lifetime earning potential. He was earning about $50,000 a year. That worked out to about $2.1 million is the lifetime value of that person. That's what the courts value it at. That's what she's seeking. Where are they going to get the money? Now here is where it gets very odd. She's looking to collect from whoever was driving the car, the brother. He has no money. Looking to collect from whoever owned the car, Mr. Fruga. He does have the money. He has 80 acres of land worth $5 million. Bingo. So she's in. She starts the lawsuit. They get rolling. Mr. Fruga now is very unhappy. He wishes he had more insurance. So he wants to blame somebody. Who's he going to blame? That's right, Agent X. So he turns around and says, Agent X, you should have forced me or compelled me or advised me more strongly to buy more insurance. Does this make any sense? Agent X told me when I first got the call that when he brought it up with Mr. Fruga, it was a non-conversation. And you can imagine this conversation. I'm not interested in any more than the minimums. I just want to be legal. So here we are. And this is when my office gets the call. Agent X calls me and says, here's my situation. Now I want to do asset protection planning. Because Agent X himself has about $2.5 million of assets. His office buildings, some property he owns, his money he's saved. So he actually is in a tough spot here. And this is a very good case to really look at the concept of fraudulent conveyance. Because in this case, I was actually able to help him, even though he called me after the fact. Now here's why. If you call me normally and you have a lawsuit that's pending, threatened, it's already right there on the horizon, you say, Doug, can you help me do asset protection planning? Most of the time I'm going to say no. I'm sorry, it's too late. And the reason is that in the law we have a concept called fraudulent conveyance, which means if I convey an asset into an asset protection plan with an intent, which is a mental state of mind, to delay, hinder, or defraud a creditor, then that conveyance can be deemed by the court to be fraudulent and brought back. So normally, asset protection planning must be done well before the fact. And in all circumstances, it's much stronger if done well before the fact. But in this case, there were certain facts that actually allowed me to do the planning after he called. What are those? First of all, how likely is there that there's going to be a creditor? Because you remember, fraudulent conveyance, the concept relies on the fact that there has to be a mental intent to delay, hinder, or defraud a creditor. Well, if there's no creditor, no problem. None at all. So how likely is there that there's a creditor? Well, this case is ridiculous on its face. I mean, to sue the insurance agent for your conscious choice that you didn't want to buy more insurance is a ridiculous fact pattern. Nevertheless, I can't be sure that that won't end up in a judgment against Agent X. I can't be sure at all, in fact, in this legal system. So, although I don't know that there's a creditor, I also don't know that there's not a creditor. So, that didn't really give me all the comfort I needed. However, the second fact is there any other source which would pay a creditor if there turns out to be a creditor? And here, when I asked, do you have insurance? Agent X said, well, yeah, I have $1 million of E&O coverage, which is errors and omissions. That's the kind of coverage that lawyers have, CPAs have, and insurance agents. He was very smart to have bought that, and that wasn't very expensive coverage for him. So, turns out that his E&O insurance carrier is actually defending the case. And if there is a judgment and any of it comes his way, he's got $1 million of coverage. So now, let's look at fraudulent conveyance again. If he creates an asset protection plan and conveys his assets into the plan, that's the conveyance portion, and that's when it happens, when you create your plan, because you're conveying your assets into the plan. Is he doing so with a mental intent to delay, hinder, or defraud a creditor? Well, if he's very much covered by the $1 million E&O policy, and this case is really ridiculous on his face, then we can say, no, his mental state was not to delay, hinder, or defraud a creditor, because he's got that creditor covered. We feel very comfortable, absolutely comfortable, that somewhere within the $1 million and the ridiculousness of the case, it's not going to creep into his personal assets. So now, can we take the rest of his assets and convey them into the asset protection plan? Well, the answer was yes. And so that's exactly what we did. Now, why are we doing that? Well, we're doing it because the legal system, and particularly right now, the economy, are in a position where it's really creating the perfect storm. As the economy goes down, more deals are going to go bad. As more deals go bad, more people start suing, because that's the way they see solving their financial problems. So he has every reason to do asset protection planning outside of this liability. And that's how we did it. So this is a great case to understand for those two reasons. One, anything can happen. You can be sued second hand, third hand, fourth hand. The way lawsuits work is lawyers they shotgun and they look for the deep pockets. And that's just the way the system functions. If you really want to understand the system, you can go online and download my special report. It's a 40-page report available on my website at lodmel.com. It goes into great detail about how our system evolved, why it got the way it got, and where we're at today. So you can do that. So it looks at that, and it also looks at the fraudulent conveyance issue, and the fact that it really is a facts and circumstances consideration. So if you have a case, if you're in a case, if you have questions, you're not sure if you can do planning now, it's a case-by-case analysis. You have to call and talk it through, and we really have to look at the facts. It might be possible, just like. Thank you, and I hope you enjoyed the case of Agent X.